Welcome to Smart Tech and Finance US, where we decode the ultimate strategies for maximizing your cryptocurrency profits. Navigating the highly volatile crypto market can be incredibly intimidating, but mastering capital management is the absolute key. Many traders fail because they lack a solid plan, letting their raw emotions dictate every single financial. Today, we will explore powerful methods to protect your capital while consistently generating impressive returns in this The foundational strategy we must thoroughly understand is called dollar cost averaging, a proven technique to mitigate. Instead of investing all your money at once, dollar cost averaging involves dividing your capital into smaller, highly. By purchasing assets at multiple different price levels, you effectively lower your average entry cost during unpredictable. Imagine the market suddenly drops significantly. With divided capital, you now have the perfect opportunity to buy. This methodical approach removes the intense pressure of trying to time the market perfectly, which is virtually impossible. When the market eventually recovers, your lower average purchase price allows you to reach profitability much faster. Let us look at a practical example of how you can divide a $10,000 portfolio. You might deploy the first $2,000 at the current market price to establish your initial baseline. If the asset price drops by 10%, you deploy the next $2,000 to average. Continuing this structured pattern ensures that you always have reserve cash available to capitalize on unexpected and deep. The mathematical beauty of this strategy lies in its ability to transform terrifying market crashes into highly profitable. Traders who utilize this strategy experience significantly less anxiety, allowing them to sleep peacefully regardless of sudden. Consistency is the true secret weapon here. Sticking to your predetermined buying levels requires immense discipline, but yields. Remember that patience plays a crucial role. Markets move in cycles, and your strategic patience will eventually. Professional investors rely heavily on this exact method to build substantial wealth steadily over long periods without taking. Now that we understand how to deploy our capital safely, we must discuss exactly which digital asset. Capital management is completely useless if you invest your hard-earned money into fundamentally flawed or highly manipulated. Choosing the right cryptocurrency requires deep fundamental analysis, focusing entirely on the underlying technology and the. You must prioritize projects that solve real-world problems and possess a clear, transparent roadmap for future technological. High liquidity is another absolute necessity. You need to ensure you can easily buy or sell without causing. Assets with massive trading volumes provide a protective layer of safety, preventing large whales from manipulating. Always verify the market capitalization and daily trading volume on reputable tracking websites before committing any. Avoid the dangerous temptation of chasing obscure meme coins that promise astronomical returns but carry an incredibly. While high-risk tokens might seem appealing, they can quickly wipe out your entire portfolio if the initial. Focus your primary investments on established Layer 1 blockchains and infrastructure projects that form the backbone of the. Diversification within your chosen high-quality assets further reduces your overall risk profile, creating a truly robust. Carefully reviewing the tokenomics is essential. You must understand the total supply, inflation rate, and token distribution. A project with an unfair token distribution heavily skewed towards founders presents a massive dumping risk for regular. Security audits from top-tier firms provide another critical layer of confidence, ensuring the smart contracts are. Community engagement and active developer activity on platforms like GitHub are excellent indicators of a healthy, growing crypto. Combining these strict selection criteria guarantees that your capital is deployed only into assets with the highest probability. Once you have secured excellent assets using smart capital allocation, defining realistic profit targets becomes your next. Many amateur traders fail because they hold on to their winning positions for too long, hoping for completely unrealistic. Setting a practical goal, such as 40% profit per month, is a highly effective way to secure. Achieving a consistent 40% return requires a masterful blend of accurate technical analysis and strict adherence. We utilize key technical indicators like moving averages and resistance zones to identify the optimal moments. When the price approaches a major historical resistance level, it is usually a wise decision to secure. You do not need to sell your entire position at once. Scaling out of trades is just selling 20% of your holdings at predetermined intervals locks in your gains while leaving room for potential. This hybrid approach ensures you never walk away empty-handed, even if the market suddenly reverses its stride. Compounding these consistent, moderate gains over several months will grow your portfolio much faster than waiting for. A 40% monthly target is ambitious but achievable if you strictly avoid greedy behaviors and follow your. Always remember that taking profits is never a mistake, even if the asset continues to rise. Your primary objective is to steadily accumulate wealth, not to perfectly predict the absolute top of every single. Tracking your trades in a detailed journal helps you evaluate your performance and refine your profit-taking strategy. Celebrate your winning trades, but remain incredibly humble and focused because the market can humble you. The most critical pillar of long-term trading success is an uncompromising dedication to strict and effective risk. The absolute golden rule of crypto investing is to never put all your capital into one single. Going all in exposes you to catastrophic losses from which your financial portfolio might never be able. By limiting your exposure on any individual trade to a small percentage, you guarantee your survival during hard. Survival is the ultimate name of the game. If you preserve your capital, you will always have another. Market corrections are completely normal and healthy, yet they often trigger extreme panic selling among inexperienced and highly. Maintaining a calm and rational mindset during a sudden 20% market drop separates the true professional. When red candles dominate the charts, you must trust your original thesis and rely on your predetermined capital. Turning off your screens and stepping away for a few hours can prevent you from making disastrous, emotionally. Fear and greed are the two most destructive forces in trading. Mastering them requires constant self-awareness, and utilizing hard stop-loss orders is a mandatory practice to protect your portfolio from unforeseen and devastating. A stop-loss automatically sells your position if the price drops below a certain level, capping your maximum. Never manually move your stop-loss further down once a trade goes against you. Accept the small loss. Protecting your mental capital is just as important as protecting your financial capital. Small losses are easily managed. Every successful trader in the world takes losses. The secret is keeping those losses small compared. When you combine dollar-cost averaging, high-quality asset selection, realistic profit targets, and strict risk management, you become. This comprehensive framework transforms cryptocurrency trading from a reckless gamble into a highly structured and predictable wealth. You are no longer guessing what the market will do. You are simply reacting mathematically to whatever. Embrace the process, study the charts diligently, and never deviate from the core principles we have discussed. Your financial future depends entirely on your ability to execute these strategies with unwavering consistency and cold, calculated. As we conclude today, take a moment to review your current portfolio and identify areas where you can implement the dollar-cost averaging strategy for your next purchase and focus only on assets with massive liquidity. Set your monthly profit targets realistically and promise yourself that you will never again go all in. Thank you for watching and dedicating your valuable time to mastering these essential financial skills with our Please subscribe to Smart Tech and Finance US for more cutting-edge strategies, and we